In today's video, we're just going to take a quick look at ATVI. Now, we do have earnings coming up, but that's not until November 2nd, so there is still time on this setup. This was one of the setups that was asked for in one of our breakout sessions. That's where I basically take a stock and, a blank chart and then throw all possible Fibonacci ratios on it as far as the price work and see if we have a setup. Well, in this case, we did. But we had mixed parameters on this one. Okay, we had price above the 200 simple moving average, but yet it was below the 50. And the 5 and 13, as far as the moving averages on the daily chart, were in a bearish mode. So there are mixed parameters. We didn't have the moving averages, just support one side of the trade. So this means it's not the highest probability setup because we don't have that. But yet we did hold above the cluster zone and we did trigger a buy entry. So what do you do with that? Well, when you have decisions on the flip side, you want to watch those to help you manage the trade, because typically if the trade setup is going to play out fully, you get a full 1272 extension, as your target. But because you also can make a case for the bears because of the pattern since this last high was made of lower lows and lower highs, you want to watch the resistance that gets set up from that, very closely, so that if you cannot get through those areas, that you ratchet up your stops, and then maybe you at least, keep a little money. But if you cannot clear those areas, then you really have to be prepared to, get out of the way. So the areas of resistance that I see, I would mostly focus on where this symmetry resistance comes in from taking these prior rally swings and projecting them from the recent low, and then also running the retracements of some of these prior swings. And the area 63.75, 64.20 is going to be an important hurdle on the way up. If we can get through that, great. Then the next decision or hurdle comes in at 64.99 to 65.25. And if you can push through that, then it's more likely that the rally continues from there towards the target. But if all of a sudden you get up here and you start seeing sell triggers against it, you at least want to ratchet up your stops, okay? Because not all of these setups are going to meet their targets, okay? Not all of the setups are going to work either. So just remember, if the market doesn't do what it's supposed to do, get the heck out of the way.